How much does long-term care insurance actually cost, and what do you get for those premiums? My name's Joe Conroy. I'm a certified financial planner, and I'm here in our conference room where I'm going to go to the whiteboard and I'll draw out two different policy designs, show you what you get for the premium and exactly how much premium you have to pay for those benefits. And if you want a customized quote, feel free to go to our website, hartfordretirement.com, and get in touch with us. We'd be happy to work something up for you. So here on the whiteboard, we're going to go through an example, Mr. and Mrs. Smith. While they might be hypothetical, these numbers are real and created from an actual policy design. So before I put the numbers up there, Mr. and Mrs. Smith, they're both age 60, they live in the state of Maryland, and they're in relatively good health. To do our best to compare two different policies as best to apples as we can, we're going to review the monthly benefit. So this is how much money a long-term care policy will pay if you qualify to go on claim. An inflation amount. So this monthly benefit has the option of increasing over time as we expect medical costs to increase as well. Benefit duration is how long you can qualify for benefits if you are on claim. Cost guarantee, are costs expected to go up in the future, or the costs guaranteed to be flat and you're not going to pay a penny more than what is in the contract. Lastly, we're going to talk about premium options. You got a couple different ways you can pay for these policies. We'll go through that and I'll show you the numbers of what this stuff actually costs. So let me go ahead and write down option number one. All right, so here's the numbers for the option number one. The monthly benefit in this case is $5,000, and that's per spouse, so could be $10,000 total if both are on claim. Inflation, it's 3% compound. You've got two options. You can do compound or simple. Compound is better because your growth is on growth. Simple works just off of the initial amount, and it doesn't compound on itself. Benefit duration, if you go on claim and you are taking the most amount of money allowed out of it, it will last 60 months. Can that money stretch further if you are collecting less than the maximum amount? Yes, so you can stretch the benefits longer if you are under that monthly maximum. Is there a cost guarantee on this policy? And that is no. So at some point, I would expect the premiums to go up, and we'll get to that in a second. But if history has proven how these long-term care policies will react in a ever-growing medical expense environment for the future, I would expect you'll have a couple of increases over the lifetime of this policy. Just want to set realistic expectations. So how much does this cost? I describe this as the use it or lose it type of policy. I write about it in my book, and that's going to cost starting off $4,914 a year. Now, that means you're going to pay that every year you want this policy enforced, or more if there's cost increases. So I say use it or lose it because you pay this money in, and if a meteor strikes you down while you're mowing your yard and you never had a qualifying event, well, the insurance company keeps your money. If you don't want to commit to a high annual amount, you will pay a premium. It'll cost a little bit more, but you could do monthly, quarterly, semi-annual. So here I put a monthly amount. It's going to be $442 a month. If you do the quick math, it's 8% more than the annual amount. So let's go do option number two and show you what that looks like. Before we get into the numbers, I describe option number two as a use it or pass it option, as you can see down here. I write about this again in my book and I compare both of them. But policy designs change, and I'll go through how this looks, and then we'll wrap it up with a comparison of which one might make more sense for you. So option number two, monthly benefit is the same, $5,000 a month, but I do want to point out that the total pool is a little bit over half of what the total pool is for option number one. You get $333,000 of total benefit between both spouses. Here you get $300,000 per spouse. It's a big difference. Inflation options depend on the two phases of this policy. So this has a two-phase claim period. Phase number one, in this example, is 33 months. There's no inflation for the first 33 months if you go on claim. So months 1 through 33, you get $5,000 a month, whether you're in year 1 or year 25. But once you go through those first 33 months, now you're in phase 2. So if you're on claim, month 34 is going to be at a 3% compound inflated number. So 5% times 3% compounding, $5,000 times 3% compounding, and that's going to give you what your monthly benefit is in month 34, 35, and so on. Two big options on this one that the other one does not offer, and that is a cost guarantee. So this policy, it is set in stones, chiseled in granite. They cannot increase the premiums on you later. And it offers a death benefit. So there's a residual value here. If you don't use this money for long-term care benefits, or you only use some of it for long-term care benefits, whoever your heirs or beneficiaries are, and you can change them, they will get what's left. Now those numbers are a little bit different. I'd have to show you a full illustration. So that would be something that you could take a look at in a customized proposal as you do some more due diligence on these policies. But you will use it or pass it, most or all of your money, maybe more than you put into it. That is a very big feature that the first one doesn't offer. So what does it cost? Cost is going to be $133,000 lump sum based on this design. Now, a little bit of a sticker shock here, but you know you're going to either use it in long-term care benefits or something's going to be passed to beneficiaries. So once you factor that in and the fact that this is guaranteed, you'll never have to put another penny into this, you can start to see how this might fit into someone's financial plan a little bit better. Maybe you don't have $133,000 lump sum, but if you have cash value life insurance, maybe a whole life policy from when you were younger and there's cash in there, we can do an exchange to fund this policy or maybe offset some of the cost. But assuming you don't have any of that, you can call me if you have a question on that. You can do an annual payment, so there's 10 pay, a couple other options. This is an example, about $16,800 a year for 10 years, or if you want to do monthly instead, let's round up, $1,500 a month, 10 years, that's all the money you'll ever have to put into it. Again, that's the use it or pass it model. Which one of these is going to be better for you personally? Well, that depends on who you are personally and what you're looking to get out of long-term care benefits. A more limited budget, this gives you the most bang for the buck. If you know that you're going to have a long-term care event, which I don't think anybody really knows, this will stretch your premium dollars and you'll get more benefits for it. If you're not sure if you're going to have a long-term care event and you really don't like the idea of the insurance company keeping your premiums, if a meteor hits you as you're mowing your yard, then at least you're going to use long-term care benefits or pass something on to beneficiaries. The money stays within who you want it to go to. You got to give up a little bit of the benefit amount, but that's a trade-off that you can discuss with me or another qualified financial advisor. Last point I want to make is as you make your decision, there's no permanent decision in this until you actually get an offer from one of these insurance companies. So you're not committing to anything until they give you an offer and we sit down and you say, this makes sense, and you get out the checkbook and you write that premium check. Up until that point, underwriting, shopping around, there's no commitment on any part. So you can walk away at any point that you want to. Just want to make sure you're aware of that because it takes a little bit of the pressure off of doing this shopping. So let me know if you want a quote. I'd be happy to work something up. We can have a discussion about it. And as always, thank you for watching.